Well, it is September 24th. The rain is coming down, but rates are going up. So that's kind of the short and the long of it all. Uh,
Hey there, everyone. Jamie with Sell for 1% Realtors. It is September 24th,
You
2025.
sound like you are way back in a box somewhere.
Let's start over.
Got a
Are you in a
microphone
box
you have.
somewhere? Are you in a box?
There's a lot
I'm
of
joined
echo.
live by the gang here at Sell for 1% Realtors.
There you go.
And it's September 24th, 2025.
Dad's hearing's going bad.
Rich, what's going on with mortgage interest rates out there in Columbus and central Columbus?
well, it is September 24th. The rain is coming down, but rates are going up. So that's kind of the short and the long of it all.
I love all
Since the
your
Fed
analogies.
Since the Fed rate cut last week, we've seen a steady progression, little by little, of mortgage rates inching up. The 10-year Treasury, when the Fed made the announcement, was at 3.99. It's now at like 4.13. So not going up crazy numbers, but we're not going down into those fives like everybody had hoped. I just locked a loan yesterday, 6.125, 20% down, 500,000 purchase with good credit. So just to give you an idea of where 30-year fixed rates are, I locked another rate earlier in the week. It was a small loan amount with a first-time homebuyer program, conventional, 5.875. So,
Oh.
the rates, you can still get a 5 if you've got a first-time homebuyer type loan. But, in general, I would say the rates are 6.125, 6.25, maybe 6%, somewhere in that ballpark on a 30-year fixed. The FHAs are in the high fives.
Any
5.8,
reason
5.7.
why they're drifting back up?
It's the same story as we've talked about. The markets are not buying a hefty commitment to long-term rate cuts. They heard a little bit of, we're worried about inflation in the announcement in the news conference, and they're taking that and saying, well, we just don't see any reason to follow down. Rates have not gone really up since the announcement, just a little bit. Maybe they were 6 and they're 6.1. They haven't gone up to 6.75 like they were, but they're not going down either. So everybody's kind of taking a wait and see approach. I don't discount the idea that the powers that be, whoever they are, know that a 5 in front of that rate causes a lot of refinancing, and they don't really want a lot of refinancing. They'd rather you keep your rate that has a 6 or 7 in front of it. So there's a lot of factors involved, I believe. But the market is not buying long-term Fed commitment to lower rates.
Saw an article that the Fed had a bond sale. Here, this was the lightest pressure that they've seen for bond sales in X number of years.
I missed that news, but that doesn't surprise me.
Yeah.
Nobody wants to buy the bonds.
Well, it wasn't like a stampede, and it's all supply and demand. The more supply you have, the less demand, then the lower the rate, and vice versa. So it was just interesting and they were kind of talking about what you were just talking about, that there are some concerns with the economy and not necessarily buying what Jerome Powell is pitching. But I guess my question is then, Rich, are we not seeing any lowering of rates building in for the next rate cut that I think everyone's kind of expecting?
I think everybody expects a rate cut. I think it's October. There's another meeting, and then there's 2 more meetings before the end of the year. I can't quite remember what the dates were, but I think they expect a rate cut in both of those meetings, but they don't know what the 2026 is going to bring. And if, again, I harken back to not that long ago, rates were 6.875. They're low 6s now. They were even in 7 in some cases. So we have come down because they do believe there's going to be a rate cut again at the next meeting and the next meeting, but they don't. Beyond that, I think no one really knows what 2026 brings with inflation, employment, unemployment. There's a lot of talk about AI affecting unemployment as well and taking jobs from people.
Right.
So there's a lot of mixed messages being sent there and a lot of information that's really not concrete at this point.
All this technology is obfuscating things, it seems. Quick question. What would you say is the best interest rate with someone coming to you? I mean, I know there can be the question of the best interest or the best credit score you've ever seen. But like,
Okay.
if you're going to apply for a mortgage, is 800 ideal?
Well, the way it works now is that there's a grid, and for conventional loans with FHA, it doesn't matter. As long as you're approved, everybody gets the same rate. Same with VA. But with conventional loans, if you have a 660 credit score, you're going to have a lower, there's going to be adjustments to your rate. 680. It goes in 20% increments. So like 660, 680, 700, 720, 740. And it used to be, even when they started counting credit scores, 740 was the gold standard, but that has moved up now and it's 780. So if you have a 780 or better credit score on a mortgage credit score, there's no better that you can do. That's the best zone that you can be in. If it's 800, it doesn't change anything because it's 800 as long as it's above 780.
The real question, though, is what do you consider to be a perfect credit score?
780 is the optimum best credit score. We don't count anything above that. Technically, I think 900 is the perfect credit score. But on a mortgage, I have never seen anybody above like an 830 range of a credit score. And that's few and far between.
What about my buyer? She's 833.
She has great credit, actually. Yes. And she does. She is very good.
I would imagine you would need to own a private island of some sort to have a 900 credit score.
Well, here's the thing. When we bought a car a couple of years ago, we went in a car dealership, and the finance guy was like, "Well, you guys have great credit." And he told my wife, "You have an 870 credit score, and Rich, you have an 825 credit score." And my wife's all jumping around thinking, "I have never seen an 875." So the credit scores differ if you go to Credit Karma or if you go to buy a car. There's a different scoring system than there is if you get a mortgage. So somebody who runs their credit on freecreditreport.com, they're going to get a score and then apply for a mortgage. And the guy says, your score is something lower than that. And it's like, well, what happened? Because I just ran it last night and it was 810. And now you're telling me it's 760. There's different scores for mortgages as opposed to the consumer credit scores you pull, or even for an auto loan, for instance.
It's
But as long as
proprietary.
on a mortgage credit score, you're above 780, you don't need to be, there's no
Benefit.
perk to being any higher than that.
Right. Okay.
On a mortgage credit score.
See, that's
So
what I thought when I
happens
went to
if I'm at
college, Rich.
779.
If 779, you're going to take a hit, believe it or not.
You're in
And
that
we're-
other tier.
Come on. We're
Yep,
talking
you're in the other
about,
tier.
it's that
Yeah.
close.
Yes,
Okay.
What school did you go
779 is
to?
A minus.
I graduated, doesn't matter.
As
He
your
got his
grand,
money's
as your,
worth.
yeah, as your grandfather would say, they passed you because they needed the seat.
Moving on.
75. Oh boy.
Maybe it was 70. I don't
Yeah.
remember.
Yeah. Oh boy. Jay DeBon, what are you seeing out there on the seller side?
We are at 5,600 listings active in Columbus now. So we are breaking through another barrier. Nationally, inventory went up 22% in August. And so we're still on the climb. Median days on market in the metro area is 42. So you throw out the highs and the lows, you're at 42 days on market. The average is 76. Median list price 405, 404 900. So it's market is the expectations need to be set right. We talk about it every week. Don't expect it to sell in 2 days, 3 days. Sometimes they do, and that's a great day. But typically it's going to take 4 or 5 weeks for you to get your buyer. And so you're playing this numbers game. I almost like clockwork. I mean, I pull up agents and look them up, and when I see someone's like slashing price after 7 days or 10 days, and I look and it's like, oh, they sold 3 homes in the last 12 months. They really don't have a feel for what the current market is.
Right.
And so it's a good time to be a seller still, in my opinion. becoming a balanced market. You know, and like the economy and the Fed. One of the Fed governors is saying the job market is robust. Powell seems to be okay with really no growth in jobs. For rates to come down significantly, I think that the job market's going to have to break. And I don't think anybody really wants that. We're pretty close. Like Rich was talking about last week, we're pretty close to neutral policy here. I don't know mortgage rates really have a whole lot further they can come down without it being like a recession or quantitative easing or something going on. So for sellers, I mean, you're at all-time high prices. You know, it's not 2008, it's not 2009, you know, unless you bought and overpaid last year or the last 2 years and you really overpaid, everyone's making money. So that's the big difference too. There's a lot of equity. That was trending on social media from the seller's angle last week, because I got multiple people texting me that Google searches for help with mortgage are at the highest level since 2008. People looking to get help with mortgage payments. I saw that renters, that the COVID money, relief money's dried up, and so evictions are on a big increase too. So I mean, if you look at new builds, they're at 2019 levels. I mean, things are not like tanking. So I think that the market is overall pretty balanced and relatively healthy. But back to the foreclosure point and people looking for help with mortgages, if they didn't buy in the last year or two, they're sitting on a big pile of equity versus back in 08, 9, 10, people were all upside down.
Right.
And they had no skin in the game. There was no equity. So it's a different dynamic. You know, people that are doomers waiting for the sky to fall, I think they're going to be waiting still. So we'll see what
Yeah,
happens. Things aren't bad.
If you've got, 40, 50,000 or more in equity, you're not going to walk away from that, with a foreclosure. And most people don't know how foreclosures work, but even if the house was to foreclose and there's an overage to what's owed to all the lien holders, you still get your money. One of the things, Jay, that I've heard here in the last couple of weeks with listings, I hadn't heard this before or as much. Home sellers are acknowledging what they're hearing on the news, and the news is fairly negative, that the housing market isn't as strong. And so I'm having sellers to tell me, yeah, I know the market's not as good as it was, where do we need to be? And so are you seeing that too?
Yes, 100%. When I go into these appointments, because I try and set the table up front and tell them, it's not 2020, 2021 where things are selling in 7 days. And people used to say, well, in my neighborhood, they sell pretty quick.
Right.
Haven't heard one person say that. Most people seem to have realistic expectations. And then we get into like pulling up these charts in front of them, showing them, hey, in the metro, it's 42-day median. And then in your subdivision, it's 38 or it's 52 or whatever the numbers are, and just kind of show them this is what to expect.
Right. Yeah, but even that number, when we're doing a market analysis, if you're going back 6 months, 8 months, 9 months to find a comp, the market has changed even in that shorter period of time.
But on this report that I have, these are weekly updates.
Okay. Yep. So, Jamie, on the buyer side, what are you seeing?
Good time to buy if you are capable. If you are, gearing up to buy a home, I think right now you can get a pretty good deal. And on the buy side, that's my concern for my clients, is getting them obviously the house that they want, but in the right deal for that house. And right now, I think it's the right time for those deals. When interest rates are 4 or 5%, those deals were people climbing over each other to get that house. First thing to go was, I would say, remedy, and then inspection, and then 50,000 over asking. So count your blessings. You didn't buy then, you can buy now. If you can buy now, I do think it's a good time.
Well, and we've talked about this numerous times that, you're going to save a quarter point, which on the average, Rich, off the top of your head, if I go from, 6.25% to 6% on the average home sale, Jay said medium's about 400,000. What am I saving on a monthly payment just on the interest? Not talking about, taxes, insurance, so on and so forth, but what would that quarter point save me on 400 grand?
About 40 or 50 bucks a month, I think, something like that. It's not major.
Right. So over 12 months at $40, you save about 500 bucks annually. And Jay, what are the numbers on the average appreciation year over year that you're seeing there in your numbers?
Those are monitored somewhere else, but what I'm quoting to people when I see them is about 3.9% year over year right now. I can
Okay.
pull up the Columbus housing reports
So
and see
let's
what
just
it
say
says.
3% on 400 grand, that's 12,000 bucks. So
Good deal. Yeah.
yeah, you're trying to save $500, but you're losing 12,000 over the next year. I mean, it doesn't make any, I mean, we've talked about this again. Get the most house you can for your money. If rates go up, you're locked in. If rates go down, then you can refinance. It seems pretty simple to me. I don't know. Maybe I'm crazy. And Jay's usually the one who tells me I'm crazy.
August, it's gone up year over year 4.4%.
Okay.
Year to date so far, we're up about 3.5%. The one caveat being that each area is different. You know, some of these areas are exploding in value still, and sometimes there's not that many sales in some of these areas, so it's hard to look through
We're
that.
just looking at the Columbus MLS averages. You're about 3.5% for this year, right?
Yes, but you gotta make sure you're buying in the right location and not just banking on, oh yeah, it's going to keep going up and up, because if you're buying in the wrong location, it may not.
No, that's how you get an average. Somebody's at 1, somebody's at 5.5. That's where you get your 3.5. So yeah, I understand that. So, all right. Anything else? Nothing? Well, then Jay Marinsky.
I think we've beaten the dead horse. If you guys would like to buy or sell a home, call us. Sell for 1% and Rich Circone at Equitable Mortgage. Thank you for joining us today.
We'll be waiting
you.
for you in the park.
Or at Kroger at the
Water Crook.
Yeah.
Thank you
should do a
guys.
remote
I'm on
from
my way to Kroger right now.
You should do a remote from spot number 1 at Kroger.
You guys have kind of reformed me.
Rich,
I've kind of like
Rich,
gone away from parking in those spots as much.
Rich will be holding a first-time homebuyer seminar in the parking lot of Kroger here, not in the
In the
too
pickup
distant
area.
future.
There you go.
We will give you guys the details on that next week.
In the grocery pickup area. I'll be waiting for you in my white SUV.
There we go.
Handing out cards.
Thank you, guys.